Good morning. Today is Wednesday, the 22nd of May, and I want to talk about a few trades from yesterday on the E-Mini S&P 500 for those of you that day trade. Again, you can take these same patterns and apply them to any market in any time frame. It's just these were such great setups that I think I can make this video pretty short, pretty concise, and teach you something here that you can go out and start using literally today or tomorrow. Okay, it's very simple. Now, when I day trade, I definitely look at the daily pivots, the floor numbers, right? The daily R1 number, the resistance number, right? I look at the daily S1 number, daily S2, 3, R1, 2, and 3, right? Those are daily pivots. I have those plotted on my screen automatically. So look at yesterday. Yesterday, the market opened up right in here. Market rallied up to the first daily R1 number, resistance 1, which should act as resistance. Now, am I going to look to sell that automatically? Absolutely not. Instead, what I do is I wait for one of my price patterns, and you've heard me talk about these two price patterns that I'm going to talk about today all the time, okay? One is that inside vertical bar, and the second is that outside vertical bar, right? The outside vertical bar, right, where it takes out the high and the low of the prior bar, and then the inside vertical bar, where the market contracts. So look at this. When the market came up to this high, right, which happened to be the R1, which should act as resistance, look what we saw here. We saw an inside vertical bar. Now, this presents a very low-risk trade opportunity. When the market takes out the low of that inside vertical bar in the very next bar, you'd be looking to sell that market. Your initial catastrophe stop loss, what I like to call the ISL, is right above the high of the prior bar. It's that simple. Look at the market moving down from that level. Perfect. Market trades down, continues to trade down. What do you know? Market comes down to the daily S1 number now. That should act as support, right? Am I going to look to buy that automatically? Absolutely not. Instead, I'd wait for a price pattern to develop, either the inside vertical bar, right, or the outside vertical bar. And in this case, we got the bullish outside vertical bar. You see that right here? This actually the low of the day. Took out the prior bar's low, took out the prior bar's high, closed in the top quarter. You buy it at the market, right? You buy it right in here. And your initial stop loss is directly below the low of the bullish outside vertical bar. And as you can see, the market moved higher, right? So a beautiful sell near the high right here, first thing in the morning, just prior to 10 o'clock. And then the market came down, hit the daily S1, created a bullish outside vertical bar where you'd be looking to buy the market. Okay? Now, the market comes up, makes a new high of the day. Okay? Busts up through the daily R1 number right in here, right? When the market comes back down to that daily R, that should act as support now. Now, you could buy it right in here. That's fine. That's a viable trade setup, absolutely. But what I want to do, and as you can see, it would have made money. It came back up. Now, the next trade I want to show you is very similar to the last couple trades that I've shown you the last few days. Look at the market retested the high right here, took out the high by only 50 cents, right? And then created what? An inside vertical bar. You see that? Right there. The high is lower than the prior bar's high, and the low is higher than the prior bar's low. You have a very, very low-risk trading opportunity by selling as the market takes out the low of that inside vertical bar. And your initial catastrophe stop loss would be directly above the high of the prior price bar, right? The highest high of the day, right there. And as you can see, what did the market do when it took out the low, that inside pattern? It actually moved down for the remainder of the day, closing right here. So basically, I've shown you three trade setups yesterday based on the inside pattern and the outside pattern. Okay? Look at that. Number one, the inside pattern, testing an R1 number, the floor pivot. Second was the buy on a bullish outside vertical bar or bullish engulfing pattern, right? Number two. And then number 3, again, based on the price pattern, is a retest of the high of the day. The market only took out the high of the day by 50 cents, created that inside pattern, right, similar to the one over here, the first one. Once it took out that low, you go short. It's that simple, folks. It's that simple. Why make trading any more difficult than it really is? Now, the difficult part about trading, as you all know, is the discipline. It's waiting for the setup and then taking the trade and then following your rules accordingly. That's the most difficult part of trading. Okay, if you've got any questions, definitely let me know. Hope you have a good day. And again, tomorrow I will revisit the markets that I've been discussing, the stocks. So I wanted to really get this to you today because I think this is important. I think you can learn a whole lot from this. Take it, really learn it, watch and observe it, and let me know what you think, okay? So, well, I'm going to do this really quick. I'm going to flip. Look at the market look at new territory again. Unbelievable. Look at the market came up to the daily R1 today. Like I showed you yesterday, created that inside pattern and dropped. Now look at, you created an inside pattern. No inside patterns in here, but look, it blew up through yesterday's high, which means we are in new territory again. Look at this. We have taken out yesterday's high again. The market is extremely, extremely strong, to say the least. Again, I've been reiterating this forever. Even though it's parabolic, it doesn't matter. The market is strong. You want to be long this market. Look at, out of all these days, you've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12 days with higher highs and higher lows. 12 out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Out of 15 days, you've got 12 higher highs and higher lows. This market continues to rock and roll. Okay, let's just make this a little longer and let me show you what I've been showing you all along. The buy-do trade, look at this. It's still up in here in this area. We call that right down in here. The market should move higher, significantly higher, and it has. It's moved about 15 points since I started mentioning the buy-do trade. Netflix is still up, but I am looking to buy this market. If we can dip down in here between the mid to the lower band, I'd like to see about 15, 20 point movement back. I'd be looking to buy, and I'll let you know what I'm looking to do. Remember that CEF trade that I pointed out yesterday? Now look at it. At $15.50, I've got the horizontal line. This was the buy right there. Look at this. It's up. It's at $16.08 right now, so that's looking good. Our first price target is $16.90. We'll see what happens today, and then I will take that stop, and I will move it even higher than that, okay? So I'm not losing any money on this trade, okay? Let's take a look at another trade. We are looking at the CCI. I'm looking for a little bigger pullback here before looking to pick this one up. And look at the Mexican peso futures contract. Big time up today. What did I say yesterday? I said I was looking for this market to start heading higher. We're at that 50 exponential moving average in here. We've got not quite an inside pattern here, but the market's starting to consolidate a little bit. And as you can see, the market's starting to move higher here. So, all right, hope that helps. Again, for those of you that enjoy day trading or have maybe an hour during the day, I hope what I showed you today helps you. And in terms of this little watch list here, hope that's helping you too. And if you've got any questions, let me know. Have a profitable day. Bye for now.